The rules for deducting contributions or donations to charities is changing right now in 2026. And whether you itemize or don't itemize, you need to understand these new rules. For non-itemizers, what are the 3 most common questions and those answers so that you can plan ahead? I got that and more coming up. If you make donations to charities, then there's always been a dividing line on your taxes. Do you itemize or do you not itemize? There's always been that, okay? If you're making donations to 501c3 nonprofits and you're looking to get a tax benefit, I know you're not doing it for the tax benefit, but if you want to be aware of, well, what is the tax benefit? If you itemize, then you got to deduct those. But if you didn't itemize, then you didn't. So that's been the dividing line. Well, do you itemize or don't you? And that's going to determine whether you get a benefit or not. Well, listen, the new tax laws, and for this, charitable deductions, they take effect in 2026. They're not creating a new dividing line. They're just moving the existing one. And here's the deal. If you already itemize and you are charitable, you're not going to like the new rule, okay? I'm going to dive into more of the details on that for itemizers out there in a future video. However, for non-itemizers that donate to charity, yeah, you're going to like it, okay? You're going to like the new rule. Not that you're going to get a benefit on all of your charitable contributions, but you will begin getting a deduction for some of it, okay? For some of it. For non-itemizers, so if you do not itemize your taxes, which is about 85% of tax filers, if you do not itemize starting in 2026, you will be eligible for a $1,000 deduction if you're single, $2,000 if you file a joint tax return. And these are for your donations to 501c3 charities. It's got to be a cash contribution, a cash donation. It must be made to a qualifying 501c3 public charity. And you've got to follow the IRS rules regarding charitable deductions, meaning you need a written acknowledgement or receipt if the donation is more than $250. Starting in 2026, even if you don't itemize, or if you don't itemize, you will be able to get this deduction. Is it an enormous deduction? No, but every little bit counts. And let's say you're in the 22% tax bracket, single tax filer, $1,000 deduction or new deduction for this, save you over $200 in federal taxes. That's a big deal. What are the most common questions as you, at the beginning of this year, are aware of this new law and seek to optimize it? What are the most common questions that apply to you if you're not going to itemize? The first, and by far the most common and likely to create the most confusion, do donations to Goodwill, right? A Goodwill type or Salvation Army, something like that. Does that qualify? No. Unfortunately, it doesn't. In the law, it states it must be a cash contribution. Therefore, a donation of goods, or donation of services, by the way, a donation of goods to Goodwill does not qualify for this new benefit. I think that is flying under the radar. I think a lot of people maybe heard this new law. They thought, I don't itemize and I do donate to Goodwill as we're cleaning things out or we're, taking care of some things. I want to make a donation and now it's going to help me on my taxes. Fantastic. Unfortunately, it won't. It's got to be a cash contribution. Donations to Goodwill do not count for this new deduction. Second, what if you donate more than $1,000 if you're a single filer or more than $2,000 if you're a joint filer? Well, your deduction is limited on the first 1,000 or the first 2,000, depending on your filing status, which means you don't get a tax benefit for donations above that amount. And I do think also this is going to be a little bit frustrating to some folks, but to remind you, well, before this new law, you didn't get a benefit at all. Again, this is for non-itemizers. So if you're not going to itemize and you were donating, say, as a single individual, $2,500 of cash to the church, you weren't getting any benefit for that. And now you'll get a $1,000 benefit. So yes, track your receipts and all that sort of stuff. Like it says, you need to have a receipt if you're donating more than $250 in cash. However, if you donate more than these limits, your deduction is going to be capped out at that limit. Not a problem. You're still getting a tax benefit. And then the third question, I don't think is going to be one of the most frequently asked questions. However, I think it's going to be one of the most important, and that is, where do I get the deduction? Where on my tax return do I get this deduction? And you might say, who cares? It doesn't really matter. Well, it does. This new deduction, if you're not itemizing your taxes and making cash donations to qualifying 501c3 charities, this new $1,000 deduction or $2,000 deduction is what's called above the line, meaning it's a deduction before you get to your adjusted gross income. And because many tax benefits like advanced premium tax credits, if you're on health, if you get your health insurance through healthcare.gov, if you're looking at, well, am I eligible for the American Opportunity Tax Credit? I've got children in college and needing some tax credits hoping to get some tax credits for that. Do you qualify? A lot of tax deductions, tax credits, or phase outs are dependent upon your adjusted gross income or modified adjusted gross income. And the law is that this is supposed to be an above the line deduction to reduce your adjusted gross income. Now, again, is this an enormous deduction, a big deduction? No, it's $1,000 or $2,000. However, that can reduce that adjusted gross income and help you qualify for other or new tax benefits, especially when combining this benefit with maybe an HSA contribution or even a pre-tax IRA contribution, something like that, to further reduce your adjusted gross income. That can make you eligible for more tax benefits, more tax deductions, more tax credits. So the rules are changing when it comes to making charitable contributions. If you do not itemize, you're now going to get a benefit. We did have a couple of years where something like this existed back after COVID. This was one of the things that they created, and now it's part of the law. So even if you don't itemize and you're giving to charity, make sure that you're tracking your receipts. What I would hate for you to do is show up a year from now having made cash contributions, but think, I'm not itemizing, therefore I don't even need to include this. I don't even need to go track that down. That church statement, those donations, I don't need to worry about that. Yes, you do. Yes, you do. Starting in 2026, you'll get a $1,000 or $2,000 benefit. Those are the frequently asked questions. If you have others, right, the rules are changing, leave them in the comment section below. I'll answer them. And all of this fits into, yes, what's your overall tax planning strategy, but also if you're charitable, what's your giving strategy as well? With these different rules, is it possible you're going to itemize at some point? If so, should you stack your contributions? Should you bunch your contributions? Something like that. Work with your certified financial planner on that. If you don't have a CFP on your team, contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.